The hidden tax. You pay every single day. Most people think they know what they spend every day, but what if the real cost of living isn't on your receipts? Every time you swipe a card, fill a tank, or even buy coffee, hidden taxes and invisible costs quietly chip away at your wealth. These are not government-imposed taxes. They are subtle financial drains built into the economy, the banking system, and even everyday transactions. Understanding them changes how you see money because suddenly the numbers in your account aren't just numbers. They are reflections of invisible forces acting constantly on your finances. By the end of this video, you'll see just how much these hidden costs affect daily life and how to manage them. Invisible costs in your daily life. Daily life comes with costs we rarely acknowledge. When buying groceries, not eating out, or even streaming entertainment, there are subtle price increases baked in. Companies adjust prices for operational costs, inflation, shipping, or payment processing, and often these increments are so small you don't notice them. Individually, they seem negligible, but over months and years they quietly add up, silently draining your purchasing power. Even habits like using convenient services or digital platforms can introduce hidden costs in fees, subscriptions, or adjusted pricing models designed to maximize profit without raising obvious flags. Some invisible costs also appear in supply chain pricing. For example, a product may cost slightly more because of energy surcharges, packaging improvements, or distribution inefficiencies. You might not recognize these tiny increments as a form of hidden tax, but collectively, they act exactly like one, reducing the real value of your money. The interesting part is that this isn't inherently malicious. It is a side effect of complex economic systems functioning efficiently for businesses, even if it slightly burdens consumers. Another layer of invisible costs is psychological. Subtle marketing strategies, loyalty programs, or perceived convenience make it easy to spend without tracking the real financial impact. Apps suggest upgrades, bundles, or premium features that feel optional but cumulatively cost more than you realize. Every minor expense, when repeated daily, becomes a long-term erosion of wealth, and most people never connect these small choices to the larger financial picture. Even energy use, transportation, and communication come with hidden costs. Utility rates, data overages, and infrastructure fees are embedded in monthly bills, often changing without announcement. The cumulative effect is similar to paying an additional tax that is invisible but persistent. Being aware of these recurring costs is the first step toward reclaiming control, understanding where money is quietly leaving, and learning to minimize unnecessary financial leakage. Finally, the invisible costs in daily life are not always predictable or linear. Economic cycles, seasonal variations, and global supply disruptions can amplify these costs in ways most people never anticipate. Recognizing that every purchase carries unseen financial consequences allows for smarter decisions and a clearer understanding of true daily expenses. Awareness is the first defense against this hidden tax. How inflation secretly takes your money. Inflation is often discussed in abstract terms, like percentages or indexes, but in reality, it slowly erodes the value of every dollar you hold. A coffee costing $3 today may cost $3.15 in a year, not because the shop owner is greedy, but because your money's purchasing power has quietly decreased. Even if wages increase, if they don't keep pace with rising prices, you are effectively paying an invisible tax on every transaction you make. Inflation operates both directly and indirectly. Directly, prices for groceries, rent, and services increase. Indirectly, investments, savings, and cash holdings lose real value over time. The hidden tax of inflation is especially pronounced for people who rely on cash or low-interest accounts, as their money loses purchasing power faster than they might notice. Over decades, this silent erosion can dramatically affect retirement planning, wealth accumulation, and long-term security. The impact of inflation is amplified in a debt-driven economy. As money supply increases through loans and credit creation, the cumulative effect reduces what money can buy. Even stable prices on the surface may mask subtle adjustments in goods, wages, and fees, making day-to-day life more expensive than it appears. Those small increases in gas, food, or utilities are part of a larger invisible drain on your finances. Another consequence is the uneven effect across demographics. Savers, retirees, and low-income households feel the brunt because their assets or earnings may not adjust quickly enough to compensate for inflation. Those with significant investments in assets like real estate or stocks may see nominal growth, but everyday spending power for essentials still erodes. Recognizing this invisible tax allows for proactive financial planning, such as diversifying income sources or prioritizing investments that outpace inflation. Finally, understanding inflation as a hidden tax reframes the entire concept of money. Dollars in your pocket are not static. They are constantly losing weight, value, and utility. Planning for the subtle impacts of inflation is essential to maintain real wealth and purchasing power over time. The true cost of credit cards. Credit cards may feel like convenient tools, but they impose hidden costs that many users overlook. Interest charges accumulate quietly, often on balances carried month to month. Even a modest annual percentage rate applied to everyday purchases can significantly inflate the cost of items when compounded over time. Swiping a card for small daily purchases may seem harmless, but the accumulated interest creates a stealthy financial drain. Annual fees, foreign transaction fees, and balance transfer costs are additional layers of hidden cost. Many users focus only on visible interest, ignoring fees embedded in account terms. Rewards programs and cashback schemes appear to offset costs but often encourage spending that wouldn't have occurred otherwise, increasing total expenditure. The psychological impact is subtle. Convenience makes overspending easier, and the financial penalty comes later in billing cycles, almost unnoticed. Credit cards also shift perception of money. Digital balances detach spending from real cash, encouraging purchases beyond immediate means. This creates both behavioral and financial consequences. People may underestimate the long-term cost of items when using credit instead of cash, unknowingly paying a hidden premium for the deferred payment option. Late fees and penalty rates amplify the invisible cost. Missing a due date can multiply interest and fees rapidly, creating a disproportionate financial burden compared to the initial purchase. Many users are unaware of the compounding effect until it manifests in account statements, turning small debts into significantly larger obligations. Even with responsible use, credit cards introduce opportunity costs. Funds used to pay interest or fees could have been invested, saved, or applied toward long-term goals. Every dollar spent on hidden credit costs represents a reduction in potential financial growth, subtly eroding wealth without overt taxation. Awareness and careful use are key to mitigating these effects. Bank fees you never notice. Banks make profits not just from interest, but also from everyday fees that can quietly add up. Monthly account fees, overdraft charges, ATM surcharges, and minimum balance penalties are often structured in ways that go unnoticed until statements arrive. Individually small, these fees compound over time, effectively functioning as a hidden tax on financial participation. Digital banking has made fee structures more complex. Maintenance fees may be bundled with optional services, automated transfers, or premium account features. Consumers frequently accept these charges because they appear minor, recurring, and unavoidable. The total impact over years, however, can be substantial, quietly reducing savings or earnings from deposits. International and cross-border transactions add another layer of invisible cost. Currency conversion spreads, international wire fees, and card usage charges often reduce the effective value of your money. Travelers, remote workers, and digital consumers may notice smaller amounts deducted per transaction, but cumulatively, it forms a consistent financial drain. Banks also profit from inactivity or delayed account management. Dormant account fees, reconciliation charges, or automated adjustments can impact balances without customers actively engaging. Many people never notice until balances have been reduced over months, creating an unseen cost similar to a tax. Understanding bank fees as a hidden cost empowers consumers to make strategic choices. Selecting accounts with transparent structures, minimizing unnecessary transactions, and monitoring fees actively can reclaim money that would otherwise disappear silently. Awareness transforms everyday banking from passive acceptance to informed participation, reducing the burden of these hidden financial drains. Hidden taxes in products and services. Every product or service purchased carries hidden costs that rarely appear on the receipt. Manufacturers embed regulatory compliance costs, supply chain inefficiencies, and production overheads into final prices. Service providers layer in labor, infrastructure, and operational margins. Each adjustment is small individually, but collectively acts as a hidden tax on consumers. Even routine purchases, from clothing to electronics, include these embedded charges that quietly inflate your spending over time. These hidden costs are often invisible because they are normalized. Consumers rarely question why a bottle of water costs twice as much in one store versus another, or why subscription services subtly increase prices each year. Behind the scenes, businesses adjust for inflation, rising energy costs, logistics, and competitive positioning. Pricing strategies further complicate the picture. Companies factor in anticipated returns, potential losses, and contingency costs into product prices, essentially embedding risk management into everyday purchases. This ensures businesses remain profitable, but it also spreads costs across all buyers, creating a system where individuals pay incrementally more than the base value of what they consume. Taxes and fees disguised as service charges also contribute. Many products include indirect taxes such as environmental levies, recycling fees, or packaging surcharges. These are often not immediately apparent, and while governments may collect them, consumers experience the effect as part of standard pricing rather than a discrete tax. Even when products appear discounted, hidden costs may remain. Bulk pricing, loyalty incentives, or bundled packages often obscure the underlying charges that were already embedded in production or service delivery. The consumer may feel they are getting a deal, yet the hidden tax remains baked into the original pricing structure. Finally, the hidden taxes in products and services are cumulative. They may seem minor for a single purchase, but when multiplied across groceries, utilities, subscriptions, and entertainment, they form a meaningful portion of monthly expenses. Recognizing these invisible costs empowers consumers to anticipate, plan, and reduce the financial drag that is quietly imposed through everyday commerce. The sneaky price of convenience. Convenience often comes at a hidden cost. Ordering food delivery instead of cooking, using subscription services instead of purchasing outright, or relying on ride-hailing instead of public transit all offer immediate benefits but embed invisible premiums into daily life. Each small convenience adds layers of hidden fees, service charges, and markups, quietly increasing overall spending. The convenience economy is designed for speed and ease, but it also subtly reduces long-term financial efficiency. Digital platforms further amplify this effect. Apps streamline ordering and payment, but they also incorporate processing fees, platform commissions, and delivery surcharges that most users overlook. What appears as a minor addition per transaction compounds over weeks, months, and years. Subscription models create similar hidden costs. Consumers often maintain multiple memberships for streaming, software, and services, with charges automatically renewing each month. Individually, the fees are small, and the perceived value justifies them. Collectively, however, subscriptions become a financial drag, silently reducing available income without providing equivalent long-term wealth creation. Convenience also affects behavioral spending. The easier it is to make a purchase, the more likely individuals are to buy impulsively. Quick checkout systems, auto-replenish features, and instant delivery encourage transactions that may not have occurred otherwise. These behaviors amplify hidden costs, embedding an invisible financial tax on decisions driven by speed and ease. Finally, the cumulative effect of convenience pricing demonstrates that short-term comfort often has a long-term cost. Recognizing this allows individuals to make strategic choices, balancing immediate convenience with financial efficiency. By evaluating the true cost of convenience, it is possible to reclaim control over spending while still enjoying benefits that are genuinely valuable. Energy bills, paying more than you think. Energy costs are another area where hidden taxes appear. The monthly utility bill often reflects more than simple consumption. It incorporates maintenance fees, infrastructure upgrades, distribution charges, environmental compliance costs, and sometimes even hidden administrative fees. Many consumers pay without considering the layers of cost embedded into the rate structure, yet these add up significantly over time. Pricing also fluctuates seasonally and regionally, introducing subtle unpredictability. Consumers often accept these changes as standard, but they are, in effect, an invisible tax on energy consumption. Smart meters, tiered pricing, and peak hour rates amplify the hidden cost, adjusting charges based on usage patterns that most people rarely monitor closely. Energy production and delivery require investment, which is indirectly passed on to consumers. Upgrades to grids, renewable energy adoption, and emergency maintenance costs are amortized across all users, subtly inflating bills. Even if consumption remains constant, the final invoice can rise annually without an obvious reason, creating a persistent financial burden that functions similarly to a hidden tax. Utility providers also apply penalties and service fees that are easy to overlook. Late payment fees, reconnection charges, and service adjustments can all impact the total cost. Individually small, these fees can compound over months, contributing further to unseen financial erosion. Finally, energy bills illustrate the principle that everyday life carries invisible costs. Awareness of rate structures, usage patterns, and billing details allows individuals to reduce unnecessary expenditures. Understanding hidden charges embedded into energy systems equips people to reclaim money that would otherwise quietly disappear, reducing the long-term impact of this invisible tax. The grocery markup trap. Grocery shopping seems straightforward, but hidden taxes appear in the form of markups, packaging costs, brand premiums, and supply chain adjustments. Retailers embed logistics, labor, and overhead into product prices, often inflating cost beyond raw production. Items on sale or in bulk may mask underlying increases elsewhere, creating a persistent financial drag that many shoppers overlook. Branding and marketing amplify the effect. Products perceived as premium or convenient often carry significant markups relative to generic alternatives. Consumers pay for packaging design, advertising, and perceived quality, even if the intrinsic product is largely similar to cheaper options. This creates an invisible tax on brand perception, subtly reducing purchasing power for everyday necessities. Seasonal and regional factors also influence grocery pricing. Transportation costs, weather-related supply disruptions, and localized demand affect final prices. Consumers may attribute variations to market forces alone, without recognizing that these factors cumulatively raise the effective cost of goods across time. Retailers further leverage psychological pricing strategies. Shelf placement, product bundling, and promotional tactics encourage purchases at slightly inflated prices. While individually small, these adjustments compound over time, and generating a hidden financial burden embedded within seemingly normal shopping behavior. Awareness of pricing structures can help mitigate these hidden costs. Finally, understanding grocery markups equips consumers to make strategic choices. Comparing brands, evaluating unit pricing, and planning purchases around true needs can reduce the impact of these hidden costs. Grocery shopping may never be free of hidden taxes, but knowledge allows shoppers to reclaim control and minimize the silent erosion of wealth in everyday life. The cost of free apps and subscriptions. Free apps and subscription services are rarely truly free. While there is no upfront payment, companies monetize your attention, data, and engagement, creating hidden costs that affect your financial and personal life. In-app purchases, premium upgrades, ad-supported models, and auto-renewals all slowly draw money from users. The structure of app monetization is designed to be subtle. Microtransactions may only cost a few dollars each, but recurring small charges add up rapidly. Subscription models encourage long-term commitment with minimal attention to billing cycles, leading to unnoticed monthly deductions. Privacy and data collection also have a financial dimension. User data is often sold or leveraged for targeted marketing, increasing the probability that individuals will purchase products they might otherwise ignore. While the direct monetary cost is invisible, The indirect impact manifests in the form of additional spending influenced by personalized ads and promotions, effectively taxing your attention and decision-making. App-based ecosystems often rely on convenience and habit. Auto-renew features, bundled services, and push notifications encourage users to spend without conscious deliberation. These mechanisms make it easy to underestimate the total cost of digital engagement, allowing small expenses to accumulate unnoticed. Understanding the cost of free apps and subscriptions requires awareness and active management. Regularly reviewing subscriptions, setting spending limits, and evaluating the real value of digital services allows users to reclaim control and reduce the invisible financial burden imposed by the digital economy. Government fees. You didn't realize. Everyday life carries government-imposed fees that are often hidden or indirect. Licensing, registration, permits, and administrative charges are integrated into services, utilities, and even consumer products. While these fees are not overt taxes, they operate similarly by reducing the real value of money and increasing costs invisibly. Some fees are so routine that they are rarely questioned. Vehicle registration, property assessments, utility surcharges, and even municipal levies often appear automatic or standard. Yet cumulatively, they create a continuous financial drag. Consumers perceive these costs as minor or unavoidable, but over time, they can amount to a substantial hidden tax on everyday life. The structure of government fees often reflects regulatory or service objectives rather than direct revenue needs. However, the practical effect is still a reduction in disposable income. Fees for licenses, inspections, or permits may seem unrelated to personal spending habits, yet they influence the total cost of living in subtle ways. Indirect fees are embedded in public services too. Utilities, toll roads, and administrative processes often include minor levies that are difficult to separate from standard charges. Though necessary for maintaining infrastructure or public services, these small amounts accumulate invisibly, quietly extracting resources from individuals and families over time. By actively reviewing bills, permits, and service charges, individuals can identify where hidden government fees are affecting their finances. Understanding and tracking these costs allows for more strategic decisions, reducing the silent erosion caused by routine administrative charges. The real price of imported goods. Imported goods carry costs that extend beyond the price tag. Shipping, tariffs, currency exchange, and customs processing all add layers to the total cost. Consumers may focus only on the sticker price while the invisible components, transportation, compliance, and import duties inflate the actual financial impact of purchasing products from abroad. These hidden costs function as a form of silent taxation on global commerce. Fluctuations in currency and trade policy add unpredictability to these hidden expenses. Even if the nominal price of an imported item remains stable, changes in exchange rates or tariffs can increase the real cost without immediate visibility. Retailers often adjust pricing gradually, making the increase appear natural rather than an imposed cost. Logistics and supply chain complexities further add to hidden costs. Packaging, insurance, fuel surcharges, and warehouse handling are included in the final consumer price. Each layer is minor individually, but collectively contributes to a significant difference between perceived and actual costs. Marketing and branding of imported products also affects pricing. Perceived exclusivity or premium quality can lead to inflated markups beyond production and shipping costs. Consumers often pay for the narrative of the product as much as the physical item itself. These embedded costs illustrate how hidden taxation in global trade shapes everyday spending. Awareness of the real price of imported goods empowers consumers to make informed choices. Comparing local versus imported alternatives, calculating total landed costs, and evaluating necessity versus desire are practical strategies for reducing exposure to hidden financial drains embedded in international commerce. How small daily costs add up to a fortune individual. Daily costs may appear insignificant in isolation. Coffee, convenience items, small fees, but they accumulate rapidly. When multiplied across weeks, months, and years, Even minor expenses can add up to a substantial fortune lost to invisible taxation. Many people fail to connect their daily habits to long-term financial impact until reviewing accumulated spending over time. The compounding effect is particularly powerful with recurring or habitual purchases. Small premiums on convenience, subscriptions, or imported goods may only be a few dollars per day, but multiplied by 365 days and multiple transactions, they quickly reach the equivalent of thousands in lost value annually. The aggregate cost is the real hidden tax many never notice. Inflation, interest, and indirect fees amplify the impact of daily costs. Each expense interacts with subtle economic forces that reduce purchasing power. Over decades, the cumulative effect is significant, particularly for those not actively monitoring or managing these hidden financial drains. Even small behavioral changes can produce large financial effects. Skipping convenience markups, evaluating subscriptions, choosing cost-effective alternatives, and monitoring banking and transaction fees collectively reduce the hidden tax burden. Over time, consistent attention to these details can result in significant savings and increased wealth accumulation. Ultimately, understanding the hidden tax on daily life highlights how everyday decisions, small as they seem, shape long-term financial health. Recognizing, managing, and optimizing these costs empowers individuals to regain control, ensuring that wealth growth aligns with actual spending rather than invisible financial drains. If this video opened your eyes to the hidden costs in your daily life, hit like and share it to help others protect their money. Don't forget to subscribe for more insights into the financial forces shaping your world. Stay aware, take control, and turn small savings into lasting impact.